Our next lesson for today is all about statement of comprehensive income. So sa una, this statement of comprehensive income is known as the income statement. Pero karon, statement of comprehensive income na siya, which is composed already of two parts. So the first one is the traditional net income section. So mo ng part 1. So here, we just need to know kung unsa ang appeal, which is sales minus cost of sales, minus operating expenses, minus financial expenses like interest expense, service charges, and etc. You're gonna get the net income. However, sometimes, you need to be able to group these items versus this, because in the part 2, that's why I enumerated this, it shouldn't be part here sa net income. Okay? So these are those items na dito sa other comprehensive income. First off, we have the revaluation surplus. So I'm going to assume na as if wala kayong alam sa revaluation surplus. We have translation gain or loss, fair value through other comprehensive income na gain or loss, and remeasurement gains and losses in employee benefits. So these are just examples. Why do we need to separate this part 1 and part 2? Because this net income, if nag-compute ka nito, after the year end, if you're going to close this, because you're going to close these items, you're going to put it in the retained earnings account. And this retained earnings account is part of the equity. However, this other comprehensive income will not go to the retained earnings, although they are going to go to another accounts or account titles under equity also. Like this revaluation surplus, it will go to revaluation reserve under equity, but not included in the retained earnings. But this revaluation surplus is what do we call this? Little by little, it will become part of the retained earnings. Pero the moment na ma-recognize siya, dito muna sa other comprehensive income, and then it will go to the revaluation reserve. So that's why they should be separated, because again, this one will go to the retained earnings. But this one, the other comprehensive income items, will go to the equity also, but not under the retained earnings. Now, since you're already familiar with this one, let's talk about the members, or what do we call, the items under the other comprehensive income. So let's talk about revaluation surplus. Say for example, a company purchased a PPE with a historical cost So meaning, when it was purchased, this is the value, 5 million pesos. But since the useful life is 10 years, and then it was already used for 5 years, the accumulated depreciation, for example, if the useful life again is 10 years, 5 years used na siya, the accumulated depreciation for this one is 2.5 million. That is 5 million historical cost divided by 10 years. You have a depreciation of 500,000 per year times 5 years usage, you have 2.5 million. So it shall be reflected in the financial statements at 2.5 million. So that's the first option when it comes to PPE. You can recognize your PPE at historical cost, less accumulated depreciation, less impairment losses. Tama? But we have the second na recognition for this PPE. That is what do we call as revaluation model. So this is the time that revaluation surplus will come into play. So later you will see what is that revaluation surplus. So revaluation model. If you're going to use the revaluation model, then you will stop to use na itong historical cost minus accumulated depreciation minus impairment losses. What are you gonna do? You need to find the replacement cost. So if this is 5 million, 5 years ago, how much is the current replacement cost? If you are going to replace this PPE, brand new. So we call that current replacement cost. That current replacement cost, for example, is about 10 million. What will happen is that if this will be recognized as the new cost, the current replacement cost, so from 5 million it increased to 10 million. So there is a change of 5 million, di ba? Tapos accumulated depreciation will also be revised. So 5 million change over the 5 million dito sa historical cost, that's 100% change. So the accumulated depreciation will also become 5 million. Kung nag-times 2 to, naging ganito, eto din, ta-times 2 dito, 5 million. So, if that happens, if you chose revaluation model, your depreciated replacement cost so it's very clear bakit depreciated replacement cost, because it's a replacement cost tapos nag-minus na accumulated depreciation equals depreciated replacement cost or sound value. So wala pa dito yung revaluation surplus, just be patient. So the sound value is 5 million. Now, if this will be applied, of course, you need to change your records. So how do you change your records? First, you debit PPE. How much? 5 million from here. So the change in PPE, na they reflect, they debit ka 5 million. After that, the accumulated depreciation should also be increased. From 2.5, it became 5 million. So you're going to increase also the accumulated depreciation account by 2.5. So it's not balanced. That is why there is what do we call as revaluation surplus. Na balancing figure, which is 2.5. So, the moment that you change from here to here, you're going to recognize in the other comprehensive income a revaluation surplus of 2.5. It will not be part of the net income section. Now, I told you that this revaluation surplus is little by little recycled to retained earnings, or it will be recognized in the retained earnings. It's because if today is the recognition of the revaluation surplus of 2.5 million, at the end of 5th year, the moment that it will go to end of year 6, the revaluation surplus that you have recognized will be decreased. How? How many years man ang useful life? It's 10 years. It's 5 years use. So, the revaluation surplus of 2.5 million is little by little, will be decreased also as time passes by because there is still 5 years, so the revaluation surplus will diminish by means of 2.5 million over 5 years remaining, so that's 500,000. So, what's the entry if it will be diminished by 500,000? The revaluation surplus, which is first credited, will be deducted by 500,000. Tapos, pupunta to sa retained earnings. So, that's revaluation surplus. Although, there are a lot of twists sa revaluation surplus under the property, plant, and equipment na discussions. But basically, that's the nature of revaluation surplus. It's part of the other comprehensive income, but little by little, it will be recycled. The term is recycled to the retained earnings based on the useful life and based, of course, on the method of depreciation. So since the problem is highlighted as to how to depreciate this one, for example here, although it was not, they call this, expressed what depreciation method is used, if the problem is silent, we're going to use the straight line method, diba? So, kanisang revaluation surplus, i-recognize po siya sa retained earnings based on straight line method. Okay? So that's it for revaluation surplus. How about translation gain or translation loss? What is that? So translation gain or translation loss happens whenever, for example, ako na nang-i-erase. Translation gain or translation loss happens if, for example, we have a company. So, let's call our company Jubaby Corporation. With a home office here in the Philippines and a branch outside the country. So we have the home office here in the Philippines and a branch, for example, in other country. For example, it's in America. Now, this home office and branch office financial statements, that means there is also an asset equals liabilities plus capital dito and also in the branch. These two, at the end of each year, shall be, what do we call this? Shall be combined.
Nawala na. Nag-blur siya ganyan. Sinulog kita.
Shall be combined. Let's talk about it again, ha? If Jubaby Corporation has a home office here in the Philippines, so there's no problem at all in the financial statements of Jubaby home office. Why? Because the assets, liabilities, and capital are expressed in Philippine pesos. So the presentational currency is Philippine peso and the functional currency also is the Philippine peso. Because, kasi pasabot din yung presentational. Pag mo financial statements, unsa may gamito na currency, presentational currency. Functional currency, pag mag-operate ang business, unsay ginagamit para magpalit ng materials, or unsay ginagamit ng customer na ibayad sa imo, that's the functional currency. So there's no problem with the home office of Jubaby Corporation here in the Philippines because the presentational and the functional currency is the Philippine peso. The problem is here sa branch, kay pag sa American the functional currency is dollars. The customers will pay in dollars. And of course, in order to get the materials and labor and etc. that is needed for the operations, dollars then ang pagbayad. So the financial statements here sa branch is normally presented also using the foreign currency. So you have, for example, $100,000 and $50,000. And then, ito, $50,000 din. Now, again, the home office and the branch office financial statement shall be combined at the end of the year. And how do you combine these two if their presentational currency are not the same? So you need to translate this into Philippine peso. Diba? So, the rule is, the assets shall be translated in the current na exchange rate or year-end exchange rate. Example, the exchange rate is $1 is equivalent to 55 pesos. So this 100,000 times 55, that's how much? $55 times 100,000. 5.5 million. Tama? And the liabilities also shall be translated using the closing rate or the current rate. So 50,000 times 55, that's 2,750,000. Diba? The problem is the branch's capital shall not be translated using the closing rate. It will be translated as to when the home office provided for the capital. Example, the home office provided this $50,000 because the only owner of the branch is the home office man, tama? So, atong gihatag ni home office kang branch ang capital, the exchange rate is $1 is equivalent to 50. So, you're going to translate this 50,000 not based on the current na exchange rate or the closing rate or year-end rate karon. You're going to translate this capital using the historical rate or the date when this capital was provided by the home. Again, when this was provided by the home office, because the home office is the sole owner of the branch, the exchange rate is $1 is equivalent to 50 pesos. So 50,000 times 50 pesos, pila man? Huh? 2.5? So 2.5. So as you can see here, tingnan ni balance. The asset is 5.5 million for the branch and 2,750 plus 2.5, that's 5 million. 250,000. There is something lacking sa credit side, sa liabilities plus capital. So, this will be balanced because you're going to recognize a translation gain of 250,000. So, that's the meaning of translation gain or loss. And this 250,000, in order for the L plus C will become 5.5, which is equivalent sa assets, will be recognized in the other comprehensive income. Okay? So, that's the nature of the translation gain or loss. Although, there are still, what do we call this? Twists sa kanang topic sa advanced financial accounting and reporting. But, basically, I just wanted you to know what is the nature of this translation gain or loss. Okay, so when you see this translation gain or loss, do not include it in the part 1. Include it in the part 2 or the other comprehensive income. Okay? Now, what is this FBOCI? So, this is in short for investment under fair value, other comprehensive income. So, example, ABX company. purchased shares. For 120,000. So, kini nga shares is shares of OPA Corporation. OPA Corporation. So, this particular investment is recognized as fair value through other comprehensive income. So, what does it mean? So, this investment will change based on the fair market value. So, meaning, if this is the acquisition date, and you have paid for 120,000, then that is the current value of the investment. But the moment that the market value of those shares, the OPA Corporation will increase, let's say, for example, it becomes 130,000, so there is an increase of 10,000, and you're going to recognize this 10,000. How? You debit the FVOCI. Okay. Mapriso dito ani. FVOCI 10. And the credit is in here sa other comprehensive income. So how much? 10,000. That is what do we call as unrealized gain OCI. 10,000. So let's put it here, unrealized gain or unrealized loss, OCI. So basically, that's FVOCI. It's just an investment that it will increase or decrease based on the movement in the market. And if it increases, of course, there will be unrealized gain. But that unrealized gain will not be recognized here. It will be recognized in the other comprehensive income. Okay? So, that's FVOCI. Now, let's go to remeasurement gains and losses in employee benefits. So, sometimes, here in the Philippines, sometimes, the employees will be given retirement benefits. So that retirement benefits will be earned by the employee during his or her service in the company. So meaning, the company will recognize a liability, which is technically known as projected benefit obligation. So, this is the liability of the employer to the employees or for the retirement pay, the projected benefit obligation. And as you can see, it's projected because they are still to retire in the future. So meaning, this is not fixed, this is not sure. So somebody should, what do we call this? Somebody or some expert should measure this one, and that professional is what do we call as an actuary. So if the actuary will say that your projected benefit obligation is wrong, it should be added. So the moment na iyang paadan ang imong benefit obligation or liability, that would be recognized as remeasurement loss on your part because your liability became bigger. So the debit is credit, projected benefit obligation or your liability. Pero ang debit, remeasurement loss. And that remeasurement loss is not part of the net income section, it's part of the other comprehensive income. It's as simple as that. Now, the actuary might also give his opinion as to the value of the fair value of the plan assets. So what is this? If this is the obligation of the employer because of the retirement to be paid to the employees, this is an asset. This is an investment of the employer. And this one has been invested para pangbayad ani. Siyempre, ang retirement baya ng mga payments is very big. Tama? So, dapat, you are going to invest na daan para pagbayad. So, again, fair value of plan assets. Di hapon sure ang value because it is based on fair market value. So, pwede na po manghilabot si actuary. Ang spelling sa actuary na ngayon si actuary, your investment or your FBPA is kulang. It should be added by 300,000. So if that's the case, since the investment, ipadakuan ni actuary, so mag-debit ka FBPA investment as an asset. Pero ang pares, the measurement, gains. It will not be part here, it will be part sa other comprehensive income. So that's the nature of this 4. Okay? So at least you have an idea of what are those 4 and ano saman sila pangtunga ng mga accounts para dili makalimutan. So that's it for your statement of comprehensive income. Although, I would like to point out that this net income presentation here is what we call as multi-step income statement. Why multi-step? Because you need to have sales here. But actually, this is net sales. Net sales. That means gross sales, less sales returns on allowances, less sales discounts, diba? So, isa na ka-step para makuha ang net sales. And in order to get the gross profit, you need to deduct the cost of sales, which is beginning inventory plus purchases, diba? Net purchases, pagani na siya, total goods available for sale minus ending inventory, cost of sales. So there are a lot of steps in order to get the net income. Because after the gross profit, you need to deduct the OPEX and the finance expenses pa in order to get the net income. That is why multi-step siya or functional income statement. Not a single step income statement. So what is this single step? Single step. Credits minus debits ra. So yung lang igrupo ang na mga credits na normal balance at na yung mga debits. I-minus nimo kas ara kuha ang net income. So what are the account titles sa income statement na credit? Of course, sales. Sales. Tapos, nasa debits na ang sales returns and sales discounts. Tapos, nasa credit ang merchandise inventory and account. Ang purchases nasa debit. Ang purchase returns and allowances nasa credit. Diba? If you can still remember the purchase returns and allowances, since makagamay man siya sa cost of sales, diba ang cost of sales is debit? Tanan kalaban ni net income is debit, like the cost of sales, the OPEX, and the FIMEX. And when you compute for the cost of sales, if makadako siya sa cost of sales, meaning the normal balance ana is debit, like the net purchases or the gross purchases, makadako sa cost of sales, di ba? Ang gross purchases. So, ang normal balance ni gross purchases na sa debit. Gross purchases. But when we talk about purchase returns and allowances and purchase discounts, makagamay siya sa cost of sales. So, meaning the normal balance of that one is credit. Tama ba? So, again, the single step income statement, you just group the account titles based on their normal balance. So, i-group nimo ang mga credits, i-group nimo ang mga debits. Credits minus debits. Wala na, net income na. Dili pareho ini nga daghan pag-agian. But normally, what is used is this one. The multi-step income statement. Okay? So, let's go to the last part of this lesson, number 5. The last part is the statement of changes in equity. So, the statement of changes in equity, na yung mga account titles diha that has been discussed sa imuha na part, na-discuss na itong last, shareholders equity. Pero sa inyo, ng mga viewers, It will be contained in another video sa corporation, the shareholders' equity. So, that's it for lesson number 5. So, we're already through with the statement of financial position and statement of comprehensive income na. Natapos na po. Okay?